Anybody at all? Can anybody give me a heads up on what commodities trading is? Trading gold or silver, great. Trading in commodities like crude oil, etc. Brilliant. 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 I love that. Very, very brilliant. Um, okay, anybody else? Anybody else with an idea of what commodities trading is about? Any idea on what commodities trading is about? Okay, trading in any of the commodity indices. Okay, trading in any of the commodity indices. Okay, okay, okay. Brilliant. Now let's dive right into it. Commodities basically gold, crude oil, and the likes. Now, in this session, you learn or you understand commodities. You'll be able to understand the different types of commodities that we have. You're able to understand why you should trade commodities. You understand how commodities are traded. You understand gold and oil as a commodity. You understand the factors that influences the prices of commodities and also tips to trade effectively. Okay, you understand the tips on how to trade commodities effectively. So let's dive right into it. Understanding commodity instruments that can be bought and sold via exchanges. Okay, I said understanding commodities, forex and stocks are not the only instruments that can be traded, which is bought and sold via exchanges. Commodities are natural occurring materials or produce that are raw materials for the production of everything from food, energy, and clothing to buildings and construction. Commodities trading cover the buying and selling of a large range of instruments, including oil and gas, metals such as gold and silver, and soft commodities like cocoa, coffee, wheat, and sugar. Commodities, we make use of these things in our everyday life. Relating it to the financial market, we're basically speculating on the price, trying to make money off the price fluctuations of these commodities. So you can basically go to a market, a physical market to be precise, and buy oil, petrol, or diesel, which is crude oil. These are components of crude oil, or gas, be it the natural gas or the cooking gas. Or you can go to a physical market and buy gold, silver, and wear them as blings. And you can also go to the market and buy wheat, sugar, coffee, and use them in your everyday to life, everyday activity. Okay. While in the financial market, we are speculating on the price factors of these commodities to be able to make money from the simplest price changes. Now, let's take for instance, rice was um, one time sold at a bag for 8,000 naira. Okay, in the global financial markets, the equivalent of 8,000 naira will be, let's say, $18. Okay, $18. And if you knew that the prices for rice would skyrocket, you would have gone to the global financial markets and traded rice as a financial instrument and went long on it. That's just the idea behind trading commodities in the global financial markets. Types of commodities. Commodities fall into one of two categories, which is the hard commodities and the soft commodities. In turn, hard and soft commodities can be further broken down into the following. Hard commodities are the likes of metals such as gold, silver, aluminum, copper, and the likes. Energy is also a hard commodity where we have crude oil, natural gas, and the likes. When we talk about soft commodities, we're talking about livestock and meat. Sorry, livestock and meat, such as cattle, pigs, and the likes. Then agriculture, we have corn, cocoa, rubber, wheat, and many more. So commodities are eventually broken down into two, which is the hard one and the soft one. So in a more simple form, soft commodities are just consumable goods. While you can't consume hard commodities, you can't drink gold, you can't eat crude oil. You can only use them in in everyday activities, such as crude oil. We fuel our car, we fuel our gen. Natural gas, we use it, and cooking gas, the likes, we use them to cook. Gold, silver, aluminum, copper, we use them in making materials or blinks that we wear around. Okay, so types of commodities just helps us understand where these goods fall into or fall under. Okay, so about the trends and reversal for commodities. Now, before we go into this, I'll be sending out a poll right now. Please let's do well to respond to the poll. Please let's do well to respond to the poll. I sent out the poll right now. It's a simple yes or no question. Let's go to the poll section and respond to. If you have any question, also please drop your questions in the question section. If you've had any conversation, drop the conversations in the chat section. So, hard commodities. This list of hard commodities includes resources that are typically received from the ground in the process of mining, which is metal, or extraction, which is energy, such as crude oil and natural gas. In other words, they are natural resources. Okay, example includes crude oil, natural gas, and the likes. Okay, and according to an ad in Life magazine, a gasoline ad in Life magazine, each day, Humble Oil is a oil producer or an oil extraction company abroad. It supplies enough energy to melt 7 million tons of glacier. This is to tell you the potential that comes with trading the global financial markets, trading the commodities market. If a company can supply energy, which is oil and natural gas, that can melt 7 million tons of glacier, okay, this is just telling you that from the fact that you understand it can melt 7 million tons of glacier, that's like a part of the North Pole, okay? You should be able to understand how much money that will be racking into the company's pocket. And you should be able to understand that the prices of oil and what? Natural gas would skyrocket. And if you can remember, crude oil just broke a 3-year high, like 3 years after the meltdown, the complete meltdown, where it went to minus $5 during the corona season. Now it's up to $82. It's still taking out a 3-year high. That's just tell you the potential that comes with trading the commodities market. Okay, soft commodities, unlike the hard ones, need additional work to be created first, then received, such as cocoa, coffee, wheat, and sugar. Why trade commodities? Why do you need to trade commodities? Before we go to why you need to trade commodities, let's go back here. Can someone give me a reason why you need to trade commodities? Okay, anybody at all? Drop your reasons why you think people need to start trading commodities. Why you think people need to start trading commodities? Why do you think people need to start trading commodities? I would like everybody to give a response on this. Why do you think people need to trade commodities? Okay, someone said the prices can go up for a long time. That's brilliant. There's a huge demand for it, so they need to supply. Prices skyrocket because of its high volatility. Yes, they can move in amazing number of pips in a day, amazing number of points in a day. They're everyday utility, so there'll always be demand for them. So the potential to make money. Brilliant, brilliant, very, very brilliant. Volatility is high. Yes, volatility on commodities are always high because of they have a high demand. It is what people use every day. I need to use something every single day, so I need to buy it every single day. Money goes into the company, money goes into the commodities market. Brilliant. Okay, so why trade commodities? The commodities market is attractive to traders because it can offer a lot. Okay, it can offer a lot. Number one, it serves as a safe haven. Gold, for instance, has historically been a safe haven asset in the times of market uncertainty. Commodities can also provide a hedge against cash inflation. Whenever there is inflation, have you ever wondered why people say buy gold, buy gold, buy gold, buy gold? Because it's a safe haven. Gold is durable, can be split into parts. It has a lot of function. That is why gold serves as a safe haven because it will protect you from inflation. The least it can do is to range within a certain price value, but never reduce in value because it's a safe haven. Leverage. Many traders trade commodity CFDs mainly because of access to leverage. It means they can trade larger positions with a relatively small deposit and amplify their profits as a result. See, the most important tool you will ever gain access to when trading global financial markets, the commodities market, is leverage. See, leverage is of two ways. I'll tell you the simple truth. Leverage is of two ways. It can make you or marry you. If you don't understand the concept behind leverage, I get a lot of clients calling every single day. They talk about, I want an increased leverage. I want an increased leverage. I want my leverage to increase from 200 to 500, from 500 to 1,000. And I end up asking them one question. What this leverage you want me to increase for you? What do you think leverage is about? They said someone told him. I said, someone told you that it will make you more profits. I agree. Yes, it will make you more profit if you utilize it properly. But if you don't utilize it properly, it's going to make you lose money. You end up losing your capital because you will over leverage, you over trade. A lot of factors will come in and you over trade. You end up losing money. So whenever we say we offer you a certain amount of leverage, it is to protect you. Okay, as a Nigerian broker, we understand our clients need to make money and they need to be protected. That's why we give them a certain amount of leverage. Then, if the client insists that the leverage should be increased and doesn't understand the concept behind leverage, and we give an increase to that client and he ends up losing the capital, the client would then say the broker is bad. The broker isn't bad. You don't know how to trade. You don't understand the concept behind leverage. Leverage gives you an opportunity to trade larger positions. Okay, if you are trading a larger position, understand you should be trading a high profitable setup or a high probability setup, not using the leverage or not just placing random trades on low probability, high probability together. Leverage will make you a lot of money if you utilize it properly when you trade. Utilize it properly in the commodities market. Diversification. Commodities price may move independently from equities, making them useful for portfolio diversification. See, the best way you can move your portfolio, you can switch your portfolio to a steady amount of growth is by diversifying from trading regulars to trading commodities. Trading regulars like stocks, indices, and forex, you can come and major capitalize on the commodities market. Because you understand this is something everyday people use. Is tendencies for commodities to go up very, very high. Tendencies for commodities to go down very, very low. Which would you like to capitalize on? The one on the high side. That is why you need to start trading commodities. You need to implement it in your trade process. You need to add it to your journal. I will start trading commodities for this reason. How you can trade commodities? You can trade commodities as a CFD, which means that you can trade it on any of our platforms, be it MT4 or Cloud Trade, even our copy trading platform. They have traders that trade commodities there. You can copy those traders also and make money and make an amazing amount of profits from what they do. Okay. CFDs allow traders to speculate on the way the price of a commodity will change without ever owning the commodity in question. That's what the financial market is about. You don't need to have gold. You can trade gold without having gold. You just need to speculate on the way the price is going, then place a trade either to the upside or to the downside. Either you go long or you go short. Either you buy or you sell. Very, very simple. Traders who expect an upward movement in price will buy the CFD. You will buy the commodity. While those who see opposite downward movement will open a sell or short position. Very, very, very simple. Once you can understand where you want to speculate to in the global financial market, where you should be looking into, what you should do when you see price do a certain thing, you've speculated on it. It is left on you to capitalize on it. Capitalize on it how? Decide if you will be buying or you will be selling. That's how it is. At the end of the contract, the two parties exchange the difference between the price of the commodity at the time they entered into the contract and the price at the end. So basically, in the end, you either make profits if your speculation is correct, or you take a loss if your speculation is wrong. Now, I want to quickly show you something on the chart. I'll just show you. I'll show you gold and oil on the charts right now. Let's see. Show you gold and oil on the chart so you can see it's better. Okay, so can you see my screen? If you can see my screen, please let me know. Okay, sincere apologies for that. My utmost apologies for that. We actually lost connection right there. So I'll be sharing the charts right now. Sincere apologies for that. Yeah, so you're going to see how price moves actually on the charts for commodities. Okay. So can we all see the charts right now? Can we all see the charts right now? Can we all see the charts right now? Please drop a yes if you can see the charts. Okay, I'd like to get more response, not just one person. Okay, so I sent out a poll just now. Please let's do what to respond to the poll. Thank you very much. So I just sent out a poll. Please let's do what to respond to it. Okay, great, great. I'm glad we can all see the charts now. So this is a typical commodities chart. This is US oil. Look at US oil. Look at US oil. See, since when US oil has been going up? Since when? October 7th. This is the 1 hour time frame. Let's go to the daily time frame. See, since when US oil has been going up? US oil has been going up since April. Since April 2020. We went down relatively like back to zero. Then, since then, we've been going up. You see how the commodities market is. Let me show you gold also. Okay, let's see gold also. Look at gold also. We've been going up since when? Since like 2015, we've been going up on gold. This just tell you the potentials that comes with trading the commodities market, the profit potential that comes with trading the commodities market, the profit potential that comes with trading the commodities market. Very, very easy, simple to make profits from. Okay, so it's either you are looking to buy, or to sell. Either ways, it always gives you opportunities to either buy or sell. But just understand that if you are buying, you are not going to expose yourself to much risk like if you're selling. Now, trading gold and crude oil. Gold is one of the most widely traded raw materials around the world, along with crude oil trading. And certainly the most popular of the precious metals is gold. To be candid, the most popular of the precious metals is gold, for both its financial and cultural value. Like everybody wants to wear gold. Everybody wants to have that golden ring. Everybody wants to have that golden bling on their neck. And also the financial value it carries. As a trader, there are several options for how to trade gold, and the most popular being CFD. Okay. So with CFD trading, you do not need to have gold physically at all. Like I said, you don't need to have gold physically. So, like I said, it's by either understanding and knowing how to speculate on price, understanding and knowing how to speculate on price. Like I just showed you, price will be going up, you want to buy. Price is going down, you want to sell. Understand how to capitalize on the direction of a certain financial instrument. So look at gold right here. Gold is going up. You want to be looking for buying opportunities. Okay. Look at oil. Oil is going up. You want to be looking for buying opportunities. You will make more money buying a certain commodity than selling that certain commodity, because tendencies of it going higher, high, tendencies of it going lower, low. Okay. So at EG Markets, we offer you CFD trading across a range of markets, including commodities trading also. So you just basically need to understand where is price going to and capitalize on it. So trading oil, crude oil is one of the most actively traded commodities in the world. A raw material we are all familiar with in Nigeria, because we have oil, we have crude oil in excess, okay? And one that is commonly extracted from Middle Eastern region. It's referred to as black gold, or mother of all commodities. So oil is referred to as black gold or mother of all commodities, because of it carries, everybody uses crude oil. You have a generator, you have a car, or the bike man, you're going to enter his bike, will buy fuel, which is crude oil or petrol, an extract of crude oil. The bus you might be entering will also use oil to work. Okay, so everybody uses crude oil. Not everybody can afford gold physically, so this is the mother of all commodities. Everybody needs it. Okay, so types of crude oil, we have the Brent crude oil and the WTI crude oil. Okay, Brent oil comes from 15 different oil fields in the North Sea. Okay, it is characterized as the light and sweet oil, although it is not as sweet or light as WTI. Okay, up to 2/3 of global oil contracts trades are on Brent. Any oil contract you place, like any oil trade you place, it's going to the Brent crude oil. Okay, any oil contract you place a trade on buy oil. We have US oil. Okay, let me add US oil. Let me add WTI to my chart so you can see it also. Let me add Brent also. I only added US oil. Let me add Brent oil also so you can see it on my chart. So that they basically move relatively the same way. Okay, so I'll show you right now on my screen. So like I said, 2/3 of global oil contract trades are on Brent. Now, WTI crude oil, as the name suggests, WTI is sourced from US oil fields, primarily in Texas, Louisiana, and North Dakota. Okay, it's referred to as the light sweet crude oil due to its low density and low sulfur content. Let me show you. Now, look down below right here where my mouse is. You see US oil. That's WTI. Okay, US oil, and see how it has been buying after the last dump that we had, the last crash that we had during Corona. Look at UK oil also. After the last crash we had in Corona, they moved relatively the same way. Okay, they move relatively the same way. After the last crash in Corona, look at how we've been soaring high. We've been soaring high for quite a while. US oil took out a 3-year high. Okay, took out a 3. We took out a 3-year high. For so long, 3 years, we were just trading lower than this high, lower than $76 level, and now we are above 70, right? $82 level. Now, expect the same thing to happen on UK oil, which is Brent oil. Expect the same thing to happen on Brent oil very, very soon. Very, 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 very soon. Expect the same thing to happen on Brent oil soon. That's just like the advantage of trading these financial instruments, the commodities market with cycles. You know where they have tendencies of going to, the tendencies of where they should be going to. Okay, so commodities prices are driven by the forces of supply and demand. Okay, commodities prices, they are driven by the forces of supply and demand. Supply and demand is why these prices tend to trade higher. Supply and demand is why price of financial instrument tends to trade higher. Once the demand is high, supply has to increase. Okay, so huge price swing can occur when scarcity or abundance of a commodity suddenly looks likely. That is why we had a crash during what's it called? That's why we had a crash during Corona. That was why we had a crash in the commodities market during Corona. Gold fell, oil fell, all commodities instrument fell because there was nobody to produce these goods, to extract these goods. Okay, and they can be triggered by regular events such as seasonal demand or less predictable factors such as bad harvest or developments in particular industrial sector, a national or regional economy, or even global events. A lot of things can affect um, 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 the prices of this commodity. And also, if you noticed, agricultural prices have risen substantially this year. If you pay very, very good attention, you notice that agricultural prices has increased substantially this year, particularly food commodities. Food commodities have increased substantially this year, driven by supply shortfalls in South America and strong demand from China. They've increased like a lot. And however, um, yes, you can do the same. Olamide, you can do it on our platform. You can do it on our platform. Global food commodity markets remain adequately supplied. Okay, remains adequately supplied by historical standards, and prices are expected to like continue soaring higher even into 2020. So these are reasons you should capitalize on the commodities market. If you be looking to go into the soft goods aspect, I think you should capitalize on it now. Look for a very, very good point of interest to buy the soft commodities in global financial market, because increased numbers of countries are going to face growing levels of active food need. So there's going to be development gains, like a lot of gains, a lot of gains. If you are looking to venture into the hard commodities market, also metal prices are expected to like trade higher due to stimulus driven growth fades in 2022. Okay, 2021 is almost coming to an end. You need to capitalize on the metal markets, okay, the metals and the commodities market. You need to capitalize on them. A faster than expected growth is coming. Very, very big one. Very, very, very big one. A very, very big one. An infrastructure program also in the United States is going to support prices of metal increasing. So the economies, the companies, they'll be doing a lot of things. You need to capitalize on these instruments. Crude oil prices are going to like skyrocket more because there's continued production by there's continued production cuts by OPEC countries and its partners. So if production is being cut, demand is going to go higher. Not much will be produced, so prices will increase, and possibly there might be need to start buying and keeping oil, because prices are going to demand is going to skyrocket over the years, because all the lockdown due to corona is easing up, so people is going to need oil, or people are going to need oil to move around, to go to work and do a lot. And you can see right now we traded above a 3-year high, and even due to the pandemic containment, if the pandemic containment strengthens a lot, there are going to be further increase. There's going to be further increase in demand, and it's going to put pressures on the OPEC and also their partners, which is going to make price trade higher. Okay, so factors that basically influence commodity prices are macroeconomic performances, which I just spoke about, politics also. No matter the type of deal the United States brings out, their politics are going to actually eventually affect the price of commodities. And also your behavior, you and I, our behavior in the market. If I feel good is going to go up, I'm going to buy. If 90% of traders feel gold is going to go up, everybody's going to buy, and price of gold is going to go up. If people feel price of gold is going to go down and we sell, price of gold is going to go down. So these are the factors that affect, that influences commodities prices. Okay? These are factors that influence commodities prices. Okay, and in conclusion, see, one of the things is it never hurts to be more informed about commodities prices. Okay? It never hurts to be informed about commodities prices and how they drive currency movement. If you understand how the commodities market work, you'll be able to trade currencies better. You'll be able to trade currencies better. And for you to stay up to date with the happenings in the commodity market, make good use of Harry. Okay, make good use of Harry, our financial market spot, to get an update on information is going on in the commodities market. Okay, so thank you for joining me on today's webinar. I'm your host, Akinwa.